It's been a difficult few weeks trading in the market. The market has not been everybody's friend lately. It's been difficult. So it's actually been like this for the last few months. So I have basically revised my strategy because I am a swing trader and just basically buying a stock these days and holding it can be difficult because a lot of our charts just aren't even panning out. We're getting a lot of setups that look like we're going to have bull breaks and we end up getting bear breaks, that kind of thing. So I've adjusted my strategy to work with this finicky market, and I've been doing pretty well, but there is a certain level of patience that you have to have with this kind of trading. So in this video, I'm going to walk through what it is that I've been doing with my trading. And the last month, I've done a few videos like this, and I've been doing the same strategy since probably about August or September. So I'm going to walk through some of the trades and just talk about why I trade the way I have been doing and the success that I've been seeing. So I had a pretty good month this last month. You can see there was about a week where I had some stopped out positions, and that was when the market just started really dipping. And since then, I have just been sort of staying out of a lot of positions or adding to some on weakness. But in this video, I just want to talk about the strategy that I've been doing in this market. Now, I've been doing this strategy probably since August, and it is a scaling in progressive strategy on swing trading. Now, the reason why this works for me is because I can't watch the market 100% of the time. Now, in a market like this, when we have bears going heavy and then we have a lot of bullish momentum and then we have bears going heavy, it's just basically like a teeter-totter. It's very difficult for swing traders. So this type of strategy has really helped me, but there is a patience level that you have to do this kind of strategy. But it has been working, and if you can't day trade every day, this strategy is a good alternative. So in this video, I'm going to go over the scaling in progressive strategy. But first, I just want to take a look at the month that I had. So you can see at the beginning of the month, you can see I had some good trades. Some of them were entered the month before, and some of them were entered at the very beginning of November, and then they were just quick little trades. And there were some really nice high trades, and then we had some low trades. Then we hit a week here where it was a lot of stopping out or closing on weakness. Some day trades didn't work out, things like that, and we closed with a couple of decent trades on the month, which is 185% profit for the month. And if you compare that to the last few months, it's not too bad. So yeah, it's definitely better than September. And in August, there's the profit there. So it was a decent month of November with a little bit of a rough patch here, but smaller losses, not really large losses. And overall, it's been pretty good. So while I do keep the spreadsheet is generally updated a little bit, after my trades, and not everybody's seeing the spreadsheet. I'm only exporting it monthly. If you're in my specific Discord server, then you will be able to have an up-to-date readout of the spreadsheet. As I update it, and you can see that if you're in my Discord server. So basically, these are the kinds of trades that I have been doing. So I have the recovery swing. And this is because I am not, when the market was trading in all-time highs, I'm not interested in those large caps that were also trading at all-time highs. And the reason for that is I just don't have levels that I can track. I don't know when these things are going to hit a ceiling because it's difficult to find that when there's no levels on the chart. So I was more interested when the market was in all-time highs. I was more interested in the smaller caps because a lot of them had a lot of weakness and hadn't recovered yet. And generally, the money will flow in to the larger caps and then it will flow in to the smaller caps. So I was trying to scale into positions to get myself ready for that because I don't want to chase things and again end up buying at the top. So a lot of these trades were those type of trades. So recovery swing would be a ticker that I think there's recovery to come into and I start scaling in. Then there's the breakout swing, which is a chart pattern where that could be a falling wedge or a bull flag, something like that. Bounce plays are generally really hurting charts. They have heavy duty flushes down. They're oversold on many different time frames, so I'll scale in there for a small bounce. And then momentum swing, I don't do those that often, but that will be when I see some resistance breaking on volume, and then I might go into that for a very quick, maybe 1 day trade on that one. And then the long-term recovery is somewhere where I will scale into positions in maybe a sector that I think is really hurting, or actual just tickers that will eventually have to hit a floor, and then will recover. And then when they recover, they're going to recover so fast, and if you don't have a piece of them, you're going to end up again chasing. So those are the types of swings that I've been doing. But the one major thing that I've been doing, what I find that works the most in this market, is scaling in. Never will I just buy a position because I think that we've broken resistance a few times. I'm going to put a huge position on that. I won't do that. I'll scale in because this market has a lot of fake outs. And so everybody knows technical analysis. The players with the big money know technical analysis. And when we break key levels, although that might be a breakout, in a past market, that might be a huge breakout, but in this current market, that could just be a fake out. So I'll put a small position for a couple of reasons. One is to basically just in case it is a breakout and we continue on. And the second is to just keep me committed to that trade because I have so many tickers that I'm watching. I have so many alerts in my platform. I'm charting all the time. If I don't have any small positions in a market at all, then I'm not going to watch things. But if I have something there, then that keeps me committed to watching that ticker and just basically every minute of every day checking in and knowing what's going on with that ticker. So my first ad is for that reason. So just briefly, I just want to talk you through the strategy of the scaling in. Now, basically, it is a scaling in progressively strategy. So if I have, let's say I have 10,000 that I want to put into a position, I am not going to buy that 10,000 outright. I am basically watching the chart. Now, if I see a reason for this trade, and that would be one of these types of trades that I'm doing at this point, then I will start to scale in. My first position is going to be very small. So if it's 10,000, I might put 1,500 on that. And that amount will vary depending on the riskiness of the swing. If it is a bounce play, my position size would likely be smaller. And usually when I send my alerts, I'll say it's a high risk, it's a low float runner, that type of thing. Those are going to be my smaller position sizes. So basically, it doesn't matter what type of position it is. My first ad is always small in comparison to how much I plan on adding to that position. And now my second ad will be usually because I see either some support holding or some strength coming in, and sometimes it's lower and sometimes it's higher. Like maybe we're running already and now I want to have a larger position here. I'll wait for a little retracement, maybe add some more to get in for the next run up, because these swings, I'm looking for bigger payouts. I don't just want 3, 4, 5%. I want to have like 18, 19, 20% off these swings. So my second position will be adding usually on holding of support or seeing some strength coming into the ticker. And then the third and the fourth, they're progressively getting larger. Each ad is getting progressively larger. And the way I do that and the reason why I do that is because in this type of market, if we have a failed setup or we have a fake out, the market, the bears were just letting it hit certain levels and then all of a sudden going short heavy, then I can see that as an opportunity because I've held back capital to increase my position size. So if I've held back capital, but the overall trend is still looking okay on this chart, we are still in this trade and we haven't switched to a complete downtrend, the reason for the trade still exists, then I have some capital back where I can add and I can make my entry a better position. So a better average. So that's what I'm doing. And it's not the same as averaging down. Averaging down is something you do when you're in a losing trade. This is something that you do and it's part of your plan. It's part of the trade plan. You are scaling in progressively. So again, the first ad's small, the next ad might be larger, then you get even larger, and then your last ad is usually your largest ad, and that will bring you to your nice average, and then you can sit and wait. And if that's a failed trade at that point, and you know that the chart's not going to do what it originally intended to do, then you can almost exit, usually break even, and or you can sit in that trade and wait, and eventually you will have a larger payout. Your percentage is going to be stronger because you have a way better average than if you had taken that 10,000 and bought that at the top and sat there and waited the whole time in the red, you're not going to have the same profit at the end. So this strategy it's a strategy to be patient with, but it also can give you some peace of mind, because rather than being sitting in the red with a lot of capital, you only have a small amount of capital. So you can do different decisions, and emotionally you can be a better trader. So rather than walk you through the winning trades, which there's quite a few winning trades on this list, and if you want to see those, you can click on the link in the description and see the full detailed spreadsheet. But rather than walk you through those winning trades, I want to take you through a couple of these trades in which the scaling in helped me exit with very minimal losses. And so I'm going to start with PLTR. I exited this trade right around break even, and I saw this bear flag, the daily bear flag, so I didn't re-enter, and basically we did play out. So we broke bear off this bear flag. So I entered this trade because we were in a falling wedge, and you can see this falling wedge. I'll just draw this up. So it was a nice classic falling wedge. Then we hit a double bottom. We hit a daily double bottom of support. So this looked like a really nice possible breakout coming. So I added a little bit here, a small position, very small position, because we were starting to break out of this bullish falling wedge. So then we hit a top and we started coming down, and I watched this day by day without adding. I believe I only added twice to this. I added once when we broke out, once when we hit the daily bottom support, and then one more when we broke some resistance here. But I still had capital left here. So when we started to fall and get into this breakout flag pattern, I basically set a stop loss at support level, and when we broke that support, I was stopped out, and it ended up being a bear flag playing out here. So you can see how scaling into this position helped me, though, because had I had a much larger size position, I wouldn't want to be stopped out for even 3%. And emotionally, I might be thinking, oh, I don't want to lose like $300, $500 here, but it wasn't a huge loss because it was only a couple of small adds. So this is why scaling in can help you. It can help you minimize your losses and help you emotionally manage your risk better. Now, the second trade I just want to go through briefly is a Neo trade. Now, I was watching this bullish flag looking pattern, this symmetrical triangle, and we were in this for days. So basically I added a small down here. We started to try to break out of it, and we came back in. So we were testing the top of this triangle. So I waited again and made a second add when we were about to break through it again. And then eventually the market was seeing some red, and I did the same thing that I did with PLTR, where I put my stop beneath a level of support that I saw that should be holding. If this was going to be a bull break, we should be able to hold this support level right around here. And when I got stopped out of that, it was very small losses because, again, I was only in not even a quarter size position at this point. And then we broke bear, and you can see how far down I would have been had I not just taken that small loss. Now, sometimes you just have to take small losses if the trade goes south, because this was not panning out to be the way that it was supposed to be. The reason for the trade no longer existed, so I just let that stop go. Sometimes I may not let the stops go if I see the chart still looking okay, but things weren't looking good in the market, and I saw things possibly going south in a lot of the trades, so I let these go, and I was really glad that I did. So we talked about how scaling in can help you on a losing trade. So now I just want to talk about how it can help on a winning trade. So I scaled in here to DDD when I saw that we were in this channel. So my first ad was somewhere around here, and we were bouncing off the bottom of the channel. So I added only a small position here. Now we hit the top of the channel, rejected, came back into the channel. So then when we hit the lower trend line here, I was confident in making another add to this position because we were sticking in this, and I was watching it. Because I was committed to this, I was watching this, and I was checking into it constantly. So basically added another position here. So now I have a larger size position in this trade. What I'm waiting for here is a break out of the upper trend, out of the upper trend line. I want to see a break of this channel, which we had that. We broke out of this channel, and then that was when I sold and took my profit there, and that was a really decent trade for this month. But scaling into this trade really helped me, because if I had added my whole amount down here, and then when we hit this level here and we start coming back down here, I might start to panic when I'm seeing all my profits go out the window. But when you're holding back capital and thinking, okay, this trade is taking off, I wish I had bought more, then you just see it as an opportunity. It helps you emotionally be a better trader, because you're scaling in here. So when we hit the top trend line and we start to come back down, you have this capital ready to go, and you just see this as an opportunity, and you think, awesome, for the next ride in this trend, in this channel, I'm going to have a larger position here. So you feel confident in adding your second position size here. And then eventually you have a really good size position when we have the breakout of this channel, which was what this whole trade was all about. So this was a good trade, but it was a much better trade because I scaled in. So that's it on my swing trading strategy and how I've evolved it to work for me in this market. When the market changes, I may just change my strategy, but that's what makes a strong trader. We have to evolve and change with the market, because the market doesn't make things easy. The market is constantly changing, so as traders, we have to constantly change as well.